Stop scrolling, because the next few minutes might completely change the way you see money, work, and your future. Right now, millions of people across the US, UK, and Europe are working harder than ever. Yet they feel poorer every single year. They earn more than their parents did. They work longer hours, and they follow all the rules. And still, something feels wrong. Rent keeps rising, groceries feel expensive, savings never feel enough, and retirement feels far away. But here's the uncomfortable truth no one talks about. The problem is not your income. The problem is how the financial system is designed. And once you understand this, you'll never look at money the same way again. Let me ask you something. If you suddenly stopped working today, how long would your money last? 30 days, 90 days, or a year? For most people, the honest answer is terrifying, because modern life has quietly trained us to survive, not to build wealth. We are taught how to earn money, but almost never taught how money actually works. Because schools teach algebra, they don't teach inflation, they teach history, they don't teach debt, and they prepare you for exams, not for financial reality. And that's exactly why so many intelligent, hardworking people stay financially stuck for decades, even though they do everything they were told was right. Let's break this down, because in the US and UK, the system is built around one dangerous idea. If you earn more, you'll be fine. Sounds logical, right? But it's incomplete, because earning more doesn't automatically mean keeping more. And for many people, higher income actually creates more financial pressure instead of freedom. Higher taxes, bigger lifestyle, more debt, more obligations, and suddenly you're earning more than ever, yet saving less than before. This is called the income illusion, where you feel rich on paper, but poor in reality. Now let's talk about something even more important: time. Because money is not just currency, money is stored time and energy. Every dollar you earn represents hours of your life you will never get back. And when inflation quietly reduces the value of your money every year, it's not just stealing purchasing power, it's stealing your time. Over the last few decades, inflation has slowly eaten away savings across America and Europe, and even at low inflation, money loses value every single year. That means if your cash is just sitting in a bank account, you're losing money silently. Not dramatically, not overnight, but consistently. And consistency is powerful, for good or bad. Now here's where most people make a mistake. Because they think investing is risky, they think it's complicated, and they think it's only for the wealthy. But the real risk is not investing at all, because the system rewards those who own assets and punishes those who only earn income. Assets work while you sleep, income stops the moment you do, and this is the line that separates financial stress from financial freedom. Let me explain it simply. There are two types of people in the economy: those who trade time for money, and those who use money to buy time. Most people stay in the first group forever. They work, they get paid, they spend, and they repeat, week after week, year after year, until one day they realize they've spent decades working with very little to show for it. The second group thinks differently. They ask better questions, and instead of asking, "How much do I earn?" they ask, "How much of my money is working for me?" That mindset shift alone can change your entire financial future, because wealth is not built by how hard you work, it's built by how well your money works without you. Now let's talk about debt, because this is where many people get trapped. Not all debt is bad, but most people only experience bad debt. Credit cards, car loans, consumer loans, debts that don't create income, they create pressure. They lock you into monthly payments, reduce flexibility, increase stress, and worst of all, they delay investing. Because people say, "I'll start investing after I clear my debt," but years pass and investing never starts. Meanwhile, those who understand leverage use debt carefully to buy assets that generate income, which is why wealthy individuals don't fear debt. They control it and use it strategically. This is uncomfortable to hear, but important. The system is not designed to make everyone wealthy. It's designed to keep most people financially dependent on jobs, dependent on salaries, dependent on monthly paychecks. Because a financially independent population is hard to control. Now here's the good news. You don't need to be rich to escape this cycle. You don't need millions, you don't need insider knowledge, and you don't need luck. What you need is clarity, patience, and consistency, because wealth is boring. It's not flashy, it's not emotional, it's not fast, and that's exactly why most people ignore it. They chase quick wins, they chase trends, they chase shortcuts, but real wealth is built slowly through boring decisions repeated over time, investing small amounts consistently, avoiding lifestyle inflation, and focusing on long-term assets. This is where compound growth becomes powerful, and compound growth is often called the eighth wonder of the world not because it's complex, but because it's patient. Time multiplies money in a way effort never can, and a person who starts investing early with small amounts can outperform someone who invests large amounts late. That's not motivation, that's math. Now let's talk about something most finance channels avoid: psychology, because money decisions are rarely logical, they're emotional. Fear, greed, impatience, and these emotions destroy more wealth than bad investments ever will. People panic sell during crashes, chase hype during peaks, buy high, sell low, and then they say investing doesn't work. But investing works, emotions don't. That's why successful investors follow systems, not feelings, because they understand that markets move in cycles, volatility is normal, and patience beats prediction. And here's a powerful truth. You don't need to predict the market to succeed. You need to stay in the market, because time in the market beats timing the market every single time. Now let's bring this home, because if you're watching this and feeling overwhelmed, that's normal. Financial awareness is uncomfortable at first, but awareness is the first step toward control, because you don't change your finances overnight. You change your habits, how you think about money, what you prioritize, and what you delay gratification for. The future version of you is depending on the decisions you make today, because every dollar you spend is a vote for comfort now or freedom later. And here's the most important part. You don't need to be perfect, you just need to be intentional. Intentional with spending, intentional with saving, intentional with investing, because the system rewards those who stay consistent, not those who start big. So if you take one thing from this video, let it be this. Stop focusing only on income and start focusing on ownership. Stop chasing more money and start building assets. And stop waiting for the right time, because the right time was yesterday and the second best time is now. Because the longer you wait, the more time, the most valuable asset of all, you lose, and once time is gone, no amount of money can buy it back. If this video changed the way you think about money, then you're already ahead of most people. Stay curious, stay disciplined, and remember, financial freedom is not a dream, it's a strategy.